Vaibhav Sanghavi, CEO of Ask Hedge Solution, joins us on the show. Hi, Vaibhav. Good afternoon and good to see you in as always. Vaibhav, what's your sense now? How's the positioning now in terms of the book, the long short positioning? How is it?
I think, we have one of bigger events from a risk perspective lying ahead. While the result may be a foregone conclusion, but as a student of risk, we generally would probably go into this event, tightly hedged, purely because our characteristic of our portfolio is to have very low volatility or probably consistent returns over a period of time. So in these kind of binary situations, we actually either are sitting on the side waiting for the outcome to kind of pan out, and probably then taking the positions of the portfolio in a directional way. Otherwise, the long and short would be evenly matched.
It's been about 2 months since this fund started. Are you fully invested, Vaibhav?
Yeah, we have around about 70% invested into the fund, currently. So in that perspective, I think we are close to our longer term averages in terms of our deployments, at least from the gross side.
So Vaibhav, what are fresh ideas, if any, fresh themes? We're starting a fresh new year at the end of one that's had some very, very sizable gains. So I guess, it's going to be a tall ask. So, anything fresh on the mind, or are you still sticking to the old themes? And in which case, just recap them for us.
No, of course, Survi. I think the theme which is going to be there for the next year, I think it is large caps, which are going to dominate in terms of our market performance. And the reasons, again, just to reiterate very quickly, is that India has now kind of increased the MSCI emerging market weight roundabout from 8% to now 17%. In the situation or in a place where global interest rates have kind of topped out and are looking to come down, though gradually, we can see some sizable inflows coming into emerging markets on an overall basis. And when we have always seen that whenever there is a sizable flow from an FPI perspective, the first point of interest is generally the large caps. Also in mind is basically last 2.5 years, the net inflow from an FPI perspective has been virtually neutral or nil. So I think we are at a situation or at a point where FPI ownership as a market cap, as a percentage of market cap is low. Interest rates topped out, likely to come down. We can see some very aggressive flows coming from the next year perspective, which brings to us the focus in terms of the whole large cap universe. So which is what is evident from today's move as well.
What is the number, the FI ownership here in India? It's come down to what, high teens?
No, in fact, if you see from last decade ownership, I think FPI ownership on NSE 200 is close to about, say, 16-17% as compared to 21-22%, which was there. So probably we are at a decadal low.
Got it. They're missing out on the party then. Maybe they'll have to come in, but they'll have to come in at higher levels. Vaibhav, the biggest leader of this past 1 year has been the PSUs. Now, many people said, they're done at every stage, at the end of the first quarter, second quarter. They just kept doing better and better. How much of steam is left in some of these PSU names, and what's your view?
See, if you look from a valuations perspective, I think a lot of the valuation gap which was there in terms of PSU versus the private sector, I think to a great extent has been bridged. But the way we would probably be looking from a PSU basket in future is basically that those sectors and companies which are backed by strong structural reforms vis-a-vis the other ones which are pure cyclical. And we would want to probably focus on those reform-oriented, government-focused, government-backed kind of PSUs, or something like anything to do with the PLI, Make in India, or defense sector. So all of those are the segments where we would probably focus on going forward as compared to the other traditional cyclical ones.
Give us the broad construct of what are your long ideas right now? How are you balancing it? Where are you short?
See, from a long perspective, I think as a theme, what we are kind of bullish, as I did mention very shortly, is on the whole industrial space, which would include capcodes, PLIs, defense, and renewables in that kind of order. So that is something which we are bullish on. Second, from consumer discretionary perspective is something where on a selective basis we are kind of keen, have some interest in. Otherwise, I think from a bottom-up perspective, also from some pharma stories, and from again one more sector which is IT, which we do think from the next 2 quarters is something where probably the worst would be over, and we can probably look at to go on long on. Whereas from a short perspective, I think we are not very excited about the consumer staples, as a segment, and probably are neutral on banking and finance as well. So these are the kind of broader sectoral bets, from a long and short perspective.
Okay. Just to get your sense on the best performing parts of the market this year, Vaibhav. So, whether you're looking at real estate sectors had a great run, if you're looking at PSUs, stocks are up between 100, 200, 3%. And then there is a whole capex theme, right? Where, again, stocks have rallied a lot on the capital goods side, on the manufacturing side. So here, where do you still find valuation comfort? Where would you still be willing to make fresh purchases?
Unfortunately, if you ask me, Survi, I think the valuation comfort isn't there, to a very, very great, level. But still, we would probably continue to back the whole industrial space capex theme. Purely because one, on a structural basis, I think this is a story which is likely to continue for the next 5 to 10 years. And, we don't mind getting into these names, even if they are a tad expensive as compared to your previous averages. Otherwise, from a real estate kind of sector, I think the way we are seeing is basically real estate prices versus real estate stock prices. My sense is basically the real estate price will kind of, not depreciate and keep on kind of gradually appreciating purely because the input costs are pretty, have kind of moved up a lot. Whereas the real estate stock prices or company fundamental prices, I think we have changed as a street to kind of valuation matrix from an NAV perspective to price to sales or price to pre-sales and so on and so forth, which is where my slight discomfort is. So maybe at good size steep correction, probably from a real estate basket is something where we will, get positive on, but otherwise till then we'll probably avoid.
Okay. Thank you, Vaibhav, for joining in. Enjoy your long weekend. We look forward to another chat. We will slip into a short break on